Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a whipsaw price action since reaching its 64-cent mark, a 4-month high, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, knocked the Aussie off its pedestal after rebounding from a 3-year low of 97.70 and now trading around 99 figure. After weeks of downward pressure, the greenback bounced, followed by President Trump's remarks that tariffs on Chinese imports would come down substantially, but not to zero, echoing Treasury Secretary Bessent's push for easing tension. Also in news, President Trump stepped back from his criticism of the Federal Reserve Chairman Jerome Powell. This positive response followed by Trump's recent threats over the Fed's decision not to cut interest rates. So with the topside level reached at 64 cents, it's now time to reassess, as the market is a little bit indecisive in terms of direction. As it attempts to find the trend, support is seen around 63.35, but a close above 64.5 could give further momentum on to 66 cents. So with the US dollar rebounding from the 3-year lows of 97.70, and as I mentioned, trading at 90, the euro pulled away from its topside target of 115, and now questions for the next move. There is still a little bit more room to the downside if profit taking persists and looks towards the region of 111. I feel the market may trend towards that area, but then rebounds. But nevertheless, there is a little bit mixed play here. So since the topside reached at 115, I still hold a neutral bias. And that, for many of the currencies, especially dollar yen, after it hit its target at 140, has rebounded and posted an engulfing candle. That could see more gains into today's session, looking on towards 144 as initial target. But that being said, the market is still a little bit wavery here in terms of the mixed RSI. And while waiting for a confirmation to this bull candle, we do need to see a close above 143 to see a rally on. But nevertheless, the way the market structure, I feel there could be a little bit of profit taking as we have been declining since 158. Turning to the pound, also a bit of profit taking, and I still hold to a neutral bias as it's still indecisive in terms of where we're going next. After the strong rally, one bear candle, well, that puts a little bit of a mix in terms of where we could go next, so hence why I'm neutral. Turning to commodities, having reached its objective of 3,500, we saw a very strong pullback and now under 3,400. Quite a significant drop, but not really buckling when it comes to the technicals. So we're not fully broken down, just profit taking. So therefore, no doubt with the pullback in play, could offer entry points for traders if safe haven demand persists. Nevertheless, if we do see this pullback, anywhere from around 3,430 to 35 could be where the bargain hunters return and look for another test to that 3,500 mark. The bull is still holding its play here at the moment since West Texas Intermediate broke above the level of 62.3045, a key level that's now put a trajectory onto $66 a barrel. With that being said, as long as the support holds around 60 to 70, then I feel this current pattern should find a further move to the upside, especially from this strong engulfing candle that appears to be playing a little bit of a short-term uptrend here. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you had a great start to the day.